Top of the morning to you. It's a bit of a chilly morning in Nairobi today, but we're very excited to just take a look at what happened last week on equities, derivatives, and the fixed income market, and to tell you what you need to be focusing on for the week ahead. But just to give you the highlights of last week, turnover was up 17.42% on a week-on-week basis. We saw 2.5 billion shillings turned over at the NSE. Of interest, the top gainers, we had 3 out of 5 being the banking stocks. Equity Bank was the best performer in the week with regards to volume, with 28 million shares traded. It crossed over the 40 shilling mark and closed at about 40.5 shillings per share. We will be taking a look to see whether there's more upside on this stock and whether the valuations at this current price justify an entry for anybody who's passed out on what has been happening in the banks. Safaricom was the second traded stock during the week, followed by Britam and CFC Stanbic, which was another surprise mover with a lot of foreign interest going on through these names. With regards to foreign participation, Safaricom was at the helm of the trading activity from the foreigners. The large stake that we saw in equity, it was a foreign sell and a local buyer. But we will be taking a deeper dive to see what happened on the stock exchange later on in the show with Elizabeth Wangeshi, who's the head of research at NIC Securities. George, tell me, what's happening in the news today that's worthy of note?
A couple of things. Good morning. Very chilly morning in Nairobi.
Very chilly morning.
Well, KCB is likely to delist National Bank of Kenya. Well, remember the transaction timeline that they're supposed to conclude this thing by September 16th of 2019.
Okay.
And that's probably in the next 2 months. That means that by the year end, maybe, the big news is that they don't need to do an EG extraordinary general meeting.
So they do not need shareholder approval.
They don't need that special meeting to ratify a delisting of National Bank of Kenya. So potentially, the Nairobi Securities Exchange is looking at 2 less stocks, because remember, Kenol Kobil is also in the process of delisting.
That's true.
Now we are looking at National Bank of Kenya delisting.
Yes.
The key thing, how do you replace these 2 stocks?
How do you replace these two?
So we need to look at a situation where with the platform, the exchange needs to onboard 2 additional stocks to replace these stocks exit. And these are very big stocks, high-profile stocks. Kenol Kobil was a very high-profile stock.
But we have a Ibuka program. Do you think the companies that are coming through, we've heard of Tusk is coming through this program. Do you think if this
I think the whole point of Ibuka is, which is excellent for me, and we probably need to have someone to discuss Ibuka on this platform, this show, is to incubate listings.
That's true.
I think that for some time, a number of companies, and I think there's a number of mid-sized companies that needs to come to the market. But the point, I think sometimes they don't understand the rationale, the value proposition. They don't get the value proposition. So I think when you have an Ibuka to incubate, sell the process, sell the value proposition, and companies like, for instance, some companies need to list. Like, for instance, last Friday we were discussing companies like Brookside.
Exactly.
Very big companies. Tuskys needs to list.
But the interesting thing about Ibuka and what I like that they have done, so they have sort of just broken the investment banking process, the transaction process, and the listing process into, I think, about 5 to 7 chapters. And for the last almost, I think from the beginning of the year or slightly towards the end of last year, they started taking a couple of companies through the process. By last week, we'd seen about 14 companies go through the first hurdle, which is coming to the exchange, meeting with the potential transaction advisors and understanding what does it mean to actually list. So they already have about 14 companies. Then you're absolutely right. Maybe we need to be able to showcase these companies. But what I'm excited about is at least 14 of these companies. Tuskys is one of these companies that is out there. They're already going through the process. And if all goes well, then you expect at least in the next 12 to 18 months, you'll expect a whole bunch of companies that are coming to list. They understand the process and they're more or less prepared to actually take over this challenge.
And that's a very important critical point that, we need to, as far as we are introducing such products and derivatives, but we also need to deepen the underlying market.
Yes. Yeah. Exactly.
Yeah, but apart from that, so something else we're following is fuel prices.
Fuel prices
were up marginally. They were up marginally, but this is
30 cents.
The 5th year. Like petrol was about 30
29 cents actually, to be precise.
Yeah, 29 cents up month on month. Probably the margin is much wider as you move away from Nairobi to go towards the city of Kisumu. It's probably around 50 cents. But the key point is a key signal. This is the 5th straight month that fuel prices are being hiked.
And I don't know, I mean, we had this conversation last week, so there could be there's certainly the potential of an increment when it comes to inflation.
Yeah.
But then for us, as long as you're looking at the NSE, what's important is what will CBK do? And we agreed that CBK, when it's looking at the MPC decision, a decision that's expected on the 24th of July, next week on Wednesday, they don't look at fuel prices and they don't look at the weather prices, because these tend to be transitionary, and they don't tend to have an impact on the end point, which is the MPC benchmark rate.
I think for the Monetary Policy Committee, and they're sitting next week, I think the key point here is look at the stability of price. I mean, from the previous press communique, they seem to have fairly anchored inflation expectations, and that's actually reflected in the headline performance of inflation.
Okay.
It's largely within the limit, the upper bound limit, and I expect that this slight fuel price adjustment that we've seen today is not likely to feed through into prices for the next 30 months, but certainly it's a big of concern. I think the concern for the Monetary Policy Committee will actually come from the exchange rate side. It's been persistently troublesome, and we were looking at some of the numbers for the close of the week. It was closer to 103.1. Last month we were talking about 101, so that's a bit of a slight increase, but that should concern them.
Okay.
And you know that our inflation is a large extent imported, and that means that exchange rate channel is very important. So I think for me, the monetary policy would still not be concerned with the current level of prices.
But it's very interesting
but
just
it's
to
very,
see.
Yeah, but it will be. I think it will be in the language. Language.
And the language has to, because I'm more interested, and this is the first time they're speaking to us formally through the MPC after they have come up with a strategy of demonetizing the currency, and after I think also the reading of the finance bill. So it'd be very interesting just to see the reading from the MPC and especially from the CBK governor with regards to his outlook or his sentiments on currency, his sentiments on demonetization, his sentiments on liquidity in the market, because stories are beginning to come out just saying that the new currency is expected to be rolled out into the economy, but then there's a shortfall. It's not adequate to be able to meet the demands of Kenyans.
Yeah, I don't know how much that true is, but you're right. I mean, it's all about, I think for us and for our viewers, is when the Monetary Policy Committee comes out of the meeting, they will release a press release. I think it's the
give us a sense of how much money they're going
I
to
think
print.
The most important thing from the press release is look at the texture, the posture, the tone of that language they're using. That's when you know what they're thinking, you know, how they're thinking ahead. So that's the key thing, will be in the language.
That's the key thing, and that's next week on Wednesday.
But I think also
we
need to also, it's a paradox, a bit of a paradox. There's not so much concern on the price side, but also they will be very concerned with the fact that the market is highly liquid. It's very, very liquid, and they've been very active withdrawing liquidity over the past 2 weeks. So that's also probably something to look out for, what they're doing in the course of this week, actually.
Actually, that's a very interesting point, just to see an indication, because now with regards to the fixed income, I think it's the share of short-term to longer-term paper is about 30 to 70%.
Yeah.
So just to also get a sense from them whether they're still aligned to their current debt strategy, or if they're thinking about anything else with regards to
the primary auction is also something to look at. I think it's this week.
Yes.
The primary auction is the Central Bank of Kenya selling 15-year bond.
It's closing this week.
It's closing. Something to look out for. The results would be key, the performance, just to gauge where the liquidity is. Well, last week, very interesting move from the central bank last week. They picked up all the bids.
They normally take 25 billion every week. With regards to short term, it's normally about 20 to 25, 20 to 25. They don't go over and take any excess capacity that comes into the market. But last week, they actually took 44 billion.
Everything. That's a big signal. And we should look out for the primary auction
to see what happens
they drink this week. They take everything.
Very exciting. You know, I can't wait to have this conversation later in the afternoon when we're talking about fixed income. But let's switch it back and just look at the top movers on the equities. I mean, it was surprising to see Equity Bank, a local buyer, coming there. And when we spoke to the brokers, they saying the liquidity, the redemptions, there's a bit of liquidity that's coming back into the local market, and they're beginning to see some of the local pension funds redeploy that liquidity into equities. And it's interesting because our conversations have been the yield curve is coming down, is expected to keep coming down unless something dramatic happens. So you're beginning to see a bit of an realignment with some of the funds saying, let's redeploy some of this money into the cheaper equity market at this point in time and see if they can be able to reap in some return before the end of the year.
The most important thing there from the market for viewers and for investors is that the yields are coming down. Fixed income yields are generally coming down. You're talking about 15-year coming in at about 12%. Now, what we need to, usually what happens when the yields come down, the stock market tends to benefit because now people shift portfolios from fixed income to equities So we should actually expect a strong performance. For
Your
the equity market
discount
this week.
factor, I'm
Yes.
always looking at your cost of equity. Your discount factor certainly becomes much lower, and you're able to come in and pick up the stocks. Very exciting things happening. But let's take a quick break. Don't forget, we are coming back to speak to Miss Elizabeth Wangeshi about the NSC. What happened last week? What stocks does she think you need to be picking up over the next couple of weeks, and especially for the week ahead? We leave you with the daily commodity prices. Don't go anywhere. And remember, we are streaming live on YouTube. Look out for us on the Metropol TV channel. See you shortly.